Welcome to the video. We got trades galore. We got everything you want and maybe even more. Here's the trades going on today. What day is it? It is Monday, January 22nd, 20 and the 24, coming from the frozen ice fields of Valparaiso, Indiana. Got a little winter storm warning again. Another one. Got some freezing rain going on. So they canceled all the after school activities. And I'm sure all the kids will be hoping once again for either a delay or e-learning or school canceled. So we'll see. But let's take a look at what's on the board so far today. All call related. So Rivian, I was waiting for it to have a little bit of a move. It did today, up a couple of percents. So I thought, just put on a 19 call. That's what I've got into it, 20 contracts. So about $38,000 in Rivian stock. That's now worth way less than that. Next Friday, expiration, February 2nd, $239. I mean, it's from where I'm from, $239 is $239. In fact, let's take a look, see if there's any math related to that. Let's see, can we do the math? If we include today as part of the trade, that'd be 12 days out, right? So refresh that. Big Mac over there. So if we collected $239 bills divided by the 38,000 we're talking about, divided by 12 days in the trade, annualized 365, 19.1%. I'll take it. I'll take it because I didn't want Rivian to be sitting around too long because who knows? It can continue to tumble down. I'll tumble for you. So I wanted to try to get some dollar bills in the pocket on a green day. Celsius bought that. What did we pay for that? I want to say $51.98. Is that what it was off the top of my head? Let's go here. Go to Celsius. I think it was $51.98. Hey, look at you. You're remembering things. Bought 1,000 shares for $51.98 on Friday. So just Friday afternoon, right before close. Currently up on the position, $740. It was like $1,300 and change earlier. Because if you look here, Celsius was trading over 54.50 this morning, and then ended the day at 52.72. So I probably sold. I know it wasn't over 54 when I sold. So I sold a call probably around in this area, 53.50ish, and it's only next Friday out, but I went all the way up to 57. So that will capture a decent amount of share appreciation. And then I put the old icing on the cake and put $990 in my pocket. Devon Energy, they've been just sitting around, lounging around the house, picking lint out of their belly buttons. So around here, you either go to school or you get a job. The word for the day is job, J-O-B. What movie is that from? If you know, then I'm not even going to hesitate to say you're super cool, not just regular cool, super cool. So Devon Energy, $45 strike, 23 contracts. Next Friday, $160. So it's not a ton of dollars, but it's $160 more than I had at the beginning of the day. Palantir, I just rolled these things on Friday. Just rolled the 1650s on Friday for $620, and then I rolled them again today. Oh boy. For same price, $1650, 20 contracts. I added a week, but I added $1,360 in my pocket. Well, don't you believe in Palantir? Aren't they going to rip on earnings? I don't know. I have no idea. They might. They might not. That's how the market's been acting, right? Earnings has been really good for some companies as far as market reaction and really bad for others. Clean Spark sold 20 contracts at $7 today for next Friday, collected $1,200 on that Bitcoin miner Clean Spark. And so had a big day, $3,949 bills So we got that going for us. Let's go to the big board and see what's happening. Hot stuff right here. So we have the Alcoa $25 puts looking good so far today. I mean, we still have all week worth of theta remaining. But if we look at, I was thinking about Alcoa because if you've noticed, I've been selling calls really close to the money because I'm experimenting. I'm just trying a little trade experiment on the companies that I still wouldn't mind owning if I got stuck with them, if I was bag holding. Alcoa, let's just take a look as the example here. My thoughts. Because I do believe in the company Alcoa. I've been working with them. Working your way back to you, babe. Let's go to here. So I'm in on this round at 2670,000 shares, currently up $945 on the share position. But I do have the 2750 calls on the board and then the $25 puts. But I've been working with Alcoa. This is my second round of Alcoa. First round went very well, hoping the second round does the same. First round was December 5th. I bought 500 shares at 25.53, 500 more at 25.27, and then do we read the shares there? 500, 300, 200. So there was 1,000 shares and had that average price in the low 25s, under 25.50. And then I sold calls, and then I let those be called away on December 22nd for 32.50. So I made some real dollar bills between share appreciation and the call option premium. So this time around, there's my 1,000 shares, $26,695 in January 18th. The following day, I sold the 2750s for $570. And so they could easily be called away this Friday at the 2750. So what does the math say? So if let's see, that would be, so the 18th to the 26th, that's 8 days, right? So if I let them be called away at 27,500 and we paid 26,695, that's 805. Write it down, $805 plus. I guess you don't have to write it down because we could just hit the plus button. The $570 from the call premium, that's $1,375 divided by what we have in on this, divided by 26,695, divided by the 8 days in the trade, multiplied by 365. So that'd be 235% annualized return. Isn't that fantasy land math? It is, but I like to annualize because that's what my mindset is working on. Am I able to hit 20% on my portfolio by searching out 20+% trades without carrying around too much baggage? So that is the thesis for at least now, because I like to flip-flop around. Trade aggressively with companies that I think are sound, which could be on the volatile side. All of these are Tesla, Alcoa, Palantir, SoFi, all of the oil stocks, etc. PayPal, Robinhood. Why'd you choke when you said Robinhood? There was nothing. Celsius, all of them volatile, but all what seem to be really good companies with a big future. So that's the thesis. Palantir 1550 puts looking good. AT&T $17. What are they at today? They're not over 17, are they? Nope, 1682. So that's under pressure. But what would be nice in these situations, because it doesn't matter if I own AT&T or not. I love the dividend, right? Where's the next dividend at? 230. Move your head. Did you already collect it? Yeah. No, that's a call. Why? You got to go down. You got to go here. So let's see. I think I have already collected the dividend. Yeah. So there it is there. 283.88. So we got a $17 call on the board. If they stay right around 17, then I'll get a nice premium for rolling that on Friday. Same with Target. Target, I've been working on this dog for a long time because I got in on it when it plummeted because of the Tuckabuck scandal. If you know what that is, give me the old wink. And so I've been fighting it. I fought it all the way down to like $107, and I paid like, I don't know, $145 for it. We'll find out in just a second. And then I've been fighting my way all the way back. I got the 138s on the board. It's currently trading at 140. So we'll be monitoring the intrinsic and extrinsic value because you got 312 left on the theta and the value with regard to what I would have to pay in a debit to roll, right? So we're looking for this number to get more reasonable because right now it outweighs where we're at. So if you add those two numbers together, we're at 141.12 and it's trading at 140.06. So we keep an eye on that. We don't want these shares to be called away at 138 because I am just vowing to not go down in defeat on Target. So let's take a look. Is this yeah, I've got Target right here. So when did we start in on this? Oh boy, all the way in May, early May. No, in April. So April we started messing around with Target, but we were doing what? We're collecting premium and collecting dividends, but look what goes on with these strike prices. Like down here I'm at 118. Went from 143 to 128 to 122 to 118 to 130, 131, all while still maintaining possession of the shares. 132, 133, 135. Then that last trade, I jumped from 135 to 138, only collected $72, but I've added that $3 of share appreciation per share on 800 shares. So that's $2,400. And let's see, when was that last dividend? So we don't have a dividend coming up for a while, but if you look, I mean, we've collected over $11,366 in premium and dividends. So I'll be looking to roll that again this week. We'll try to find the right opportunity. Like if we looked at it right now, roll it, and we had to pay that huge debit to get out, 312. What do we have to do to roll up at least a buck and not pay any dollar bills? So we definitely can't do it now. Oh, what in the? When is earnings? I don't think they have an earnings coming up right away, do they? No. So it's end of the month. So the 27th, Target will announce earnings, but we can roll only 1 week out and still collect $1 and a couple bucks here. If we rolled out, can we get to 140? Do I hear 140 on the following week? Yes. So we can go to 140. Even if we did it right now and it added 18 days to the trade, we would probably do that and still collect a positive premium of $128 and then $2 per share on 800 shares. That's $1,600. You know how often we do that, right? Every day of the week and twice on Sunday. So that's what we would do with Target. And I'm just thinking out loud here with you. Tesla, obviously, the 232.50 calls are not really in jeopardy, but the reason that they're only at 77% is because there's earnings aftermarket on Wednesday. So I'm hoping Tesla shoots to the moon and all my shares are ripped away from me. But I'm looking for it to be green tomorrow so I can sell some covered calls in the 300 additional shares I'm sitting on. So there's 100 shares there. Then I got 300 shares in my pocket, and Tesla was down 1.6% today. So I'll be keeping an eye on that, trying to find an opportunity to sell those covered calls and collect some of that cash. Unity, here's another example. So Unity currently closed at 34.22. So I'm already in the money on the Unity, but what did we buy those for? So we bought Unity at And this is my second go around for Unity. So we bought them at 33.08. So the 33.50 would give us 42 cents per share on 1,000. That's $420. And then we also collected $820 of premium. So it's kind of like a swing option play, like a swaption. What? It's a swaption. You and your silly names. Swaption. Write that down. I may use it again. And then UCO, I'm hoping that they break out. USO breaks out, and I don't even have an opportunity to roll those, and they just take those shares because I am way down on my whiskey on EOG, ExxonMobil, Devon Energy, PBF Energy, etc. And ExxonMobil just is not cooperating. It's like making my butt stink. Closed at 96.82. I was looking for it to be above 97 today to sell covered calls just to get some action on the board. And I think it's going to do that tomorrow because, I mean, USO, the US oil ETF was up 1.26% today, and ExxonMobil was down 0.13%. And normally you're going to have a direct correlation. So that scares me a bit because of sentiment, right? You know how we feel about sentiment. It doesn't really matter except what people think as a mass of people, mass of humanity, herd mentality. That's what moves a lot of these stocks in the directions, whether we want them to go that way or not. So that's what we are thinking about today. Thanks for tuning in. Click the like button, subscribe, comment, share with a lovable friend, and I'll see you in the next video.